Oracle delivers a big disappointment. Tech companies seeing weakness across the board in license, maintenance, and hardware. European banks borrow almost 500 billion euros from the European Central Bank for 3 years, and U.S. markets try to hold on to a Santa Claus rally. I'm Alix Steel, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the morning call. Scott, it's a very confusing morning. We had that big rally in the S&P yesterday, nice Santa Claus rally of 3%. Futures were up, 9 handles, and now we're flat. What does that mean? Does that mean this rally is fading, or can it hold?
I'd like to see this rally hold. I think yesterday the igniting bar that we saw, the gap and go that we saw, took a lot of traders by surprise. So some entered yesterday, now trying to get involved for what could be a multi-day move. Now, as far as the futures being up 9 or being flat, that's not the biggest deal because of the size of the rally yesterday. But you don't want to see us give away more than a third of yesterday's move. You want to see some dip buyers keep this in control, because if we start to give back more than half of yesterday's gains, I think everyone's going to start pulling their hair out of their head.
All right, so let's go to the chart, because I want to see what that third would look like, what that key level is that we're going to have to hold today to have more proof in the rally.
Well, first things first, let's take a quick look at the S&P. You'll see yesterday, really nice move. We closed on the dead highs. We engulfed these 4 days. If you look at the higher lows in place from October, here's the one in October. Here's your low, which is higher in November. And hopefully this is the low in December. So you see a string of higher lows, which technically is good. What you want to see is finally take out this resistance, finally take out this downtrend, which would be above the 1260, 1265. But obviously it's not going to happen in a 2-day move. So what I want to show traders right now, what I'll be looking at, because I did go home long, some people want to buy the dip, but you want to see if you can. You look at your 5-minute chart from yesterday. This is when you had your gap and go, and when it broke above 123, 123.20, you had your squeeze for the rest of the day. So if we do trade lower today and they do some downside probing, I think you look to see if you could buy this 123 and for us to hold, or have any hopes of this rally continuing, we better hold above this 122.18. And if we do get here, though, a lot of traders are going to be second-guessing being long anything.
Now, despite the futures being choppy, seems pretty normal for a trader, but what I'm hearing in terms of the fundamental chatter is perhaps the reason why is we saw European banks borrow almost 500 billion euros from the ECB. That was much more than expected. So the first off, it was like, great, that they're getting their financing. If they go buy more sovereign bonds, that's wonderful, because the ECB then, in essence, is becoming a lender of last resort. But I wonder if also now we're seeing markets say, ooh, that was more than we thought. European banks are in much dire straits than we thought, and that's why we're seeing the selling. Do you think any of that is playing into the selling we're seeing this morning?
I definitely think so, and there's been a big push-pull with that. People wanted to see it go strong and wanted to see that people are taking advantage of the 3-year time horizon to relieve some pressure, and then they want to see that in turn go into some yields falling, like you saw yesterday with Spain. But then when you go after all the money, then like, uh-oh, are they looking for extra insurance? Are they really in that bad a shape? So that's why you've seen some of the bigger fluctuations this morning. But I think the market will start to figure it out, and I think it's the bazooka that everyone really is talking about that is needed to help our markets continue.
Right, ECB printing was what everybody wanted, and now in essence they got it in some way. So then, and last quick question before we get to the stocks you might be adding to your longs. Is light volume an issue? I understand light volume, who cares, you go up, you go down on any kind of volume, but is that a concern?
Well, yesterday the volume was actually stronger than Monday, and Investors Business Daily has their formula for a confirmed rally or market correction. Yesterday, they put the market back in a confirmed rally, because we never violated the low that was put in to start it on day 1. This is, I think, day 17. And it doesn't mean we're going to have a massive move, but no rally has started without this formula. So according to them, you could buy carefully now and be in a tier 1. And then as the market proves itself, like today, if we could hold higher than follow through in the end of the week, you start adding to positions.
All right, so your strategy, if we dip below, you're going to want to, if we hold that 1/4% or 3% retracement, then you're going to be adding to those longs?
Yes, I'm going to try.
Are you going to sell then if we break below that level? Or
I'm going to figure it out how it goes. I'm
Okay.
going to see the speed of it. I'm going to try and stay long. I tried to stay long a few weeks back. I got hurt doing so. I'm making more just trading. Every time I try and position for an additional move, you get hurt, and that's why traders are frustrated. So I'm involved like 5 or 6 positions now. I'm not going to just sell at that level. I'm going to see if I can add to it. And if we could, as long as you don't like close on the lows and start really breaking down, I think I'm going to try and stay with it for the next week or so to see if we can get back up to that 1260, 1265 area.
Now, I know that an Apple and a Google are the stocks that you like to stay with and you like to add. Are those your 2 go-to stocks, or one of those 6 stocks?
Well, yesterday, I wasn't sure about Apple, but Apple had a potent move up. It corrected a lot of what was going on in the charts. If you look here on Apple, you will see really nice move. Okay, stock, took out this entire resistance area, so that showed some strength. We actually reclaimed the 50-day moving average. I'm long some. I do think if we can get a trade above yesterday's high of about, what is that, 396.10, that also clears this resistance. I think the next area is going to be 400 to 410. If we pull back, though, with the futures in the beginning, I think that you have to buy the dip here. This 391.82 is the 50-day for Apple to stay strong, for me to stay confident. I think it has to stay above that 391.80 and re-hold that 50 that it took back yesterday.
And what about Google? Didn't have as an explosive move as Apple did.
Well, I think the market, Google, people want to know whether or not this market's for real. They're not going to let leaders just break out and run for the fences unless we know that this is going to continue. So yesterday it gapped up into big resistance, but didn't have intraday follow through. I am long some. I'm going to try and stay with some. If you look at the chart of Google, you will see not many stocks are hanging by the highs. Not many of them are above all these moving averages. So as long as it stays above, I would say 620, I think the power is there. And if you look at the monthly chart of Google, you will see it looks awesome. It's in the upper end. It's poking up against big resistance. If the market definitely gets a little bit more strength, you're going to see this power through 635, and then next year it could easily be above 700.
What about the losers here? I mean, yes, Baidu had over 6% pop yesterday, but can that still be considered a loser, though, right now in tech?
Well, it technically out of the high beta, it broke down, and now I'm looking for just a trade. There can be some oversold trades as long as the market stays intact, and Baidu showed a reversal day yesterday. If you look here on Baidu, it's not like an Apple and a Google. It's still actually hanging out here, but if you go back to the daily, I'll show you what I'm talking about. It did break above this mini lower pivot, which was a great trade yesterday. Doesn't mean it's going to be a good one today, but if it could start getting through yesterday's high of about 118.78, there's a cash flow move back to 122, 123. I think this one is more for the traders versus what Apple and Google could be for investors.
And then Amazon, is that somewhere in between here? Because it didn't have an explosive move like a Baidu. It was up only like 1.5% yesterday, but it has been in the penalty box for so long.
Yes, Amazon, I think for investors, unless you really love the story, and I'm not sure what the chart's telling me because the chart's been saying it's been weaker, I think there's a trade here. If you look at the chart here, you will see that it had an outside reversal day, okay, which it hasn't violated yet. That was this day on heavy volume after a big move lower. You had this ascending channel broken to the downside, ascending channel broken to the downside, and then you had this reversal, and it's holding above it. I am not in Amazon. I would look for a Q-type trade if it starts to break through this 183 for perhaps a move to 190-ish or so. But right now, as far as an investment, I would be a little bit skeptical. As a trade, it's in the cards for some type of cash flow move.
And I want to round this out talking about Oracle having a really rough quarter, reporting after the bell yesterday, missing on earnings, revenue, guidance, you name it, pointing to softer IT spending, down 10% in pre-market. Okay, first off, if you own the stock long already, do you sell here or do you have to just hold and wait?
At this point, it's come in so much. I feel like if you own it, you have a long-term thesis. This is the first time Oracle's missed in a long time in a very tough environment. Just keep it if you have it. Okay, as far as if you don't have it, it could be interesting because it's already pulled in a lot going into this report. So perhaps it won't close on the lows, and you could be a buyer today. If you look at the chart of Oracle, you will see it's not like we were up here expecting a huge, awesome report, and then you disappointed. It's all the way down at support. So now it's opening below this 27. I think that you could, if you want to be in Oracle and you didn't chase it up there, this 26 to 27 area could be a spot to watch if you want to buy with a long-term thesis. And as a trade, if it puts in a low there in the first 15 minutes, you could trade it versus that low, and perhaps it's down 10%, maybe it closes only down 6%, and that probably would also help the tech sector for it not to close in the dead lows and cause so much weakness.
All right, fair enough. So we're going to be right back with some more ways on how to play this oversold bounce that we've seen. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, welcome back. So the question is, what stocks you might want to sell on this rally? So Scott, we talked about the Apples and the Googles where you might be looking to add more long positions, but what sectors, what stocks do you need to sell after we saw that 3% rally, and if it can't hold up today? My first instinct is going to be go to the financials. I mean, you have Goldman Sachs, Bank of America, XLF, all up almost 4%. They've just been creamed in the last couple months. Is this your opportunity to get out?
It could be if you're really worried and scared of any of the financials, but I think that yesterday was like day one of an oversold bounce. So typically, if you want to sell it, fine. But if you want to short it right there, it's a little bit tricky. Like if I show you the chart of Goldman Sachs, you'll see, stock's been so battered and bruised. Every time it's had a move, look at the size of this move from about 85 to 115-ish. This last one was from about 85 to 106. So to sell it after a one-day move like here, it's a little bit quick, I think. I think perhaps we can get a move to 94, 95, and that would be a spot to sell Goldman Sachs versus selling it right here. I think there's a bit more room. You could have a high, lower high, and maybe even another one. So I'm long, Goldman Sachs. If we could start getting above yesterday's high, I think I could use a little bit more cash flow to 93, 94. But if it breaks this pivot, I'm running for the exits.
And very quickly, do you think the Bank of America is any different, though? I mean, that stock has just gotten so hammered, broke below that $5 level this week.
Well, this has been the trouble spot. This is where the psychology always shifts. When every time Bank of America starts getting hit through key levels, then the market starts really noticing and saying, you know what, we can't go higher without the banks, but we also definitely can't go higher when they're breaking levels. So Bank of America broke below $5. It came back above it. It's like at 520. I'm only a little bit from yesterday, just a small trade. I think that if you look at room, it's not really that compelling, but if it starts getting above this 520, maybe you get a move to 545 and then figure it out. Look at the last few times. This one went from 5 to almost 750, and then from 5 again to only 6. So these rallies are getting shorter. So if it can't go up today and it starts getting back below this $5, I do think that's going to be a negative side, and then Santa might start drinking his eggnog early.
All right, then talking about some stocks that might have more to their oversold balance and actually have good fundamentals, let's go to Schlumberger, up almost 5% yesterday. Now, if anything, we have all these geopolitical issues now affecting oil. There's riots in Kazakhstan, weaker Iranian production. All of that is going to be positive for the oil services going forward. I mean, FBR says that real GDP growth of 2% is enough to keep the supply and demand picture tight for oil, and that's going to be good for oil services.
Well, I think that's a good thesis for 2012, that trade has to develop. I know I tried to be along the OAHs.
Okay.
I got stopped out, but it was only because I trade things real tight. I think some of these could still be accumulation. And with those fundamentals, which you just stated, something like Schlumberger is worth a look. If you look here, it's not leading the market if you go to the chart, but it's still in the game. You still have this somewhat of an inverted head and shoulders pattern where it didn't really violate it. Yes. Did it trade through this lower pivot and stop people out like me? Yes. But it traded right back above it. I think that there's room here to about 70, 71 if it wanted to go. And then that's where you have to relook at it. You have a big channel here. It's going to take a long time to get back to this resistance. So if it gets halted halfway through and then turns lower, then this group still needs more time.
And is it the same thing with, say, a Cummins rose 5% yesterday? That rose on the back of a stronger Q4 earnings from Navistar, and Cummins makes engines. And Navistar said that truck sales rose 37%, engines increased 33%. So I wonder if it's the same kind of strategy for Cummins, even though long-term down the road, I mean, this is one of Stephanie Ling's, Director of Research for the Street's favorite picks. Is it still going to be a good stock?
Right now, it's still kind of incubating. It's still not showing any same type of thing. Look real quickly at the chart. You'll see it's not back at the lows, but it's not showing any momentum yet. It did hold this pivot, of about 85. It tried to clear here. I do think there's some room back to 94, but this pattern still is in control of it. It's not really igniting or looking great yet. If you want to be in a tier 1, be in a tier 1, and then if it finally starts breaking this downtrend and taking back these moving averages with some volume, then it can get going for momentum. But right now, it's just you're just anticipating a move of something like fundamentally. The charts haven't told you that you could start adding. It hasn't started working yet. All
right, fair enough. Let's go to some quick ways to make some cash. We have 5 stocks we want to quickly highlight for you. Want to kick it off with Nike. Guided revenue growth in the mid-teens for next year. It reported earnings above expectations, delivered that solid beat. Margins, though, slipped a little bit, and I just wonder if this is a good trade for today or a long-term buy.
Well, I think it's opening up near the highs. It's near that 97, 98. It'll be interesting for the market to see if it actually get above it and push through it. Lately, strong stocks get sold as they try and break out. So if we could actually go up, hold, and close on the highs, I think that'll be good for the market. For an investor, I think you hold. For a trader, I would just watch it for market complexion.
And how about JCPenney's? Are we looking at a breakout here for this stock?
This stock, I have to show you the pattern because it's still intact. I know it's had a few false starts, but it does look okay. Nice high-level consolidation. There's a big spot here right around 34. If we can get through 34 and the market wants to go, I think this is in the cards. Holding higher above the moving averages, which I like, so above 34, it can continue.
And then checking in with tech, let's go to IBM, Hewlett-Packard, competitors of Oracle. Is there a trade off of these 2 stocks, perhaps a buying opportunity if they sink in sympathy with Oracle, or perhaps a rally to go with that?
Well, I think IBM's down about $2 in sympathy with Oracle. It bounced off that uptrend. I think IBM is going to be looked at really closely because, on the the size of the Oracle miss, and IBM is in, I guess, some type of similar business.
Yeah, and it was also, IT spending is slowing. Like, that's what we can take away from Oracle, and it's not that they lost market share, which would have been, say, good for an IBM. It's a broad-based sector issue.
So you have to be very careful. So if you look at the chart of IBM, technically, it's going to be down $2. What I would first do is look at yesterday's low of 184. It'd be nice to see if it holds that, but if it breaks that and starts retesting this uptrend, it's not going to be healthy for tech overall, and definitely not for this. So I would be in a tier 1 at most, and as a trader, maybe see if it could trade off the lows, but watch this uptrend carefully.
And Hewlett-Packard, same kind of strategy?
Hewlett-Packard, it's such a non-event for me because no one it's such a bad.
Trade.
But at this point, you got to look at it, I guess. It's just an ugly chart. I would just stay away from it.
Leave it there. All right.
So there you go.
Staying in tech, really quickly, want to go to SanDisk. Is there a trade for the stock?
SanDisk still holds higher. It's still one of the chosen ones for macro investors. I would keep it on the radar for another push into year end if that's what we get. So if you look here at the chart, you will see it's holding right in these moving averages for a trade. If it can get above this 49, I do think it could start to contend with these highs. If the market lets some of these leaders make new highs, SanDisk is in the cards.
All right, wrapping it up, Scott, I'm just curious to see how you're going to protect yourself as you're sort of trying to dabble in certain long positions here. Are you going to short like the spiders or something to give yourself a little bit of help just in case we turn down?
That would be the smart way to do it. Take your 5, 6, 7 favorite stocks, short the spiders against it. Unfortunately, last night I went all one direction because I thought we'd have some follow through. So I wanted to see a little bit more of a move and then start staying with my best stocks and hedging with the spiders. So, if you're going to do it for the rest of the week into the new year, have that hedge just in case some bad news comes out of Europe, just in case something surprises, if we get that downgrade that people are looking for with France.
Right.
So at least you have a hedge so you could open down, cover your spiders, and then see if the stocks you own show relative strength, add to positions, and keep trading around it. So don't go out without a hedge because it's, there's no reason not to sleep at night. And at this point, though, the glass should be half full with yesterday's rally with IBD putting us back in a confirmed uptrend. So try and pick the best stocks, not the laggards, and figure out your time frame.
All right, so that's it for us for today. Happy trading, everybody. Stay flexible. I'm Alix Steel from The Street.
Yeah, we're not going to see you for a while.
That's right. I mean, I'm off until the new year. So happy holidays, everybody.
Have a great time.
Thank you.
Hi,